Guys, today I am going to talk about a major event unfolding right now in crypto, and this is going to have a massive effect on the crypto markets in the very short term. So if you are invested in crypto, you will want to watch this video. We're talking about Bitcoin on longer and on shorter time frames. We're talking about the inflation numbers and everything else. So welcome back, everybody. My name is Cristiano, bringing you cryptocurrency videos every day, teaching you how to make money in this market. If you are new to the channel, then make sure to subscribe and activate the bell right now. And with that said, guys, let's begin by looking at Bitcoin here on the 4-hourly time frame. And yesterday, crypto did get a little bit of a drop here. So you can see that the red line was trying to hold up the Bitcoin price, and then came the CPI data and we went straight down here. Now, Bitcoin really didn't do that bad, because if you look at the traditional markets with the numbers being released, the traditional markets actually seems to have had a deeper correction here. Now, look at this. The traditional markets, we are approaching this key level of support right here. It has held us one time, it has supported us 2 times, 3 times, and now is it going to support us a 4th time? If this does not hold, then expect some more downside for the traditional markets and for Bitcoin as well. Now, of course, long-term Bitcoin is going to be fine. In fact, long-term, if we enter into a recession or a multi-year bear market, I think that Bitcoin is going to start to depeg eventually, or decorrelate, which I talked about yesterday. There is that chance. Make sure to watch my video from yesterday if you haven't done that. But for now, of course, the markets, Bitcoin, S&P 500 are very, very correlated. Which brings me to the wedge here, because you can see that we are approaching the bottom of this wedge here. We are just a couple of, $100 from this. So if we continue to go down here, we are going to be supported right here. And of course, in general, being inside of the orange box here is massive support for Bitcoin. Although, we have been we've been supported here for it feels like an eternity. I still think that this is still relevant and that we can continue to find support right here. So we're keeping an eye on that, guys. So let's talk about the numbers. So the inflation numbers yesterday were expected to be 8.3%. Instead, we got 8.6%. So the inflation numbers came out higher than what was expected. And this is, of course, why we saw the markets go down, because now we need to ask ourselves, what are the Fed going to do? Are they going to be even more aggressive with increasing the interest rates? Are they going to be more aggressive with trying to get the inflation under control? We will see about that. But overall, I still think that we are in the vicinity of a Bitcoin bottom. If we have not already hit the bottom, I think that we are going to do it in the vicinity of where we are at right now. I mean, we can drop down lower. In fact, I am expecting us to continue to trend a bit lower. But when I talk about vicinity, I'm talking about between, where we are at right now down to the previous bottom. Like in this overall vicinity, I think we are going to find the bottom, or we have already found the bottom right here. So let's talk about a major crypto event unfolding right now. And this could potentially have massive effects. I'm going to clear everything up for you. So let's talk about this. So you can see that Ethereum is down 7.1% today. That's more than what Bitcoin is down. It's more than BNB. It's more than Cardano, and so on. So there is some FUD going on for Ethereum right now. I'll explain it to you. So Lido, staked Ether, is basically you depositing Ethereum to the Beacon chain, which is the proof of stake version of Ethereum. As you know, later this year, Ethereum is going to move to a proof of stake system, but you can deposit your crypto right now and earn some yield on it already. But what Lido helps you do is that instead of, depositing your Ethereum, they would deposit it through this protocol, and in exchange, you will get a STETH token. So basically, for every Ethereum you stake in this Lido protocol, this one right here, you will get an equivalent of a staked Ethereum, which you can use for DeFi, you can use for a bunch of different stuff. So that's the first thing we need to remember. Each Lido Ethereum, or STETH, is actually backed by one actual Ethereum on the Beacon chain. Now, the thing is, we don't really know when exactly the Ethereum is going to move to a proof of stake system. It's going to be later during this year. Is there going to be some delays? We don't know. But once that is live, you are going to be able to redeem your staked Ethereum for Ethereum on the Ethereum 2.0 chain. Okay, so it's not going to be immediately, but it's going to be within like 3 to 6 months from when Ethereum 2.0 actually goes live. So just understand that for every ST you are able to redeem 1 Ethereum once the proof of stake network is live. So 1 ST is always backed by 1 Ethereum. Okay, so what is the issue? Well, you have these different pools where you can trade Ethereum to ST. Now, these are of course supposed to be one-to-one, as in 1 Ethereum is going to be worth 1 ST, but that has not been the case recently. No, the peg has actually been going down. And as you can see right now, for 1 ST, you're only able to get 0.95 Ethereum, and this actually went down to like 0.9 Ethereum earlier this day, so it has actually recovered a little bit. And this is also what you can see over on CoinGecko. You can see the Lido staked Ethereum is only worth 1,585, while Ethereum is worth, more than that. So the peg is starting to deviate here. And this is of course on the back of everything that happened with the UST and Luna. People are very afraid of this situation because, everyone knows what happened with UST, got into a death spiral, Luna went down. But one thing we have to remember here is that UST was not over collateralized. It was not backed entirely by reserves. Meanwhile, ST is actually backed by Ethereum. You just cannot withdraw it right now from the beacon chain. So normally this one-to-one peg would be maintained by market makers. Well, recently what we've been seeing is that market makers have been withdrawing, ST from the curve pool. This is why you see that the pool right now is 78% ST. There's only 21% Ethereum right here. So this pool on curve is mainly consisting of ST right now. And as more people do not want ST, they're trading their ST for Ethereum. And this is why you got this imbalance here, why the peg is not one-to-one anymore. Okay, so stay with me guys. I am going to continue to explain this. So what you can see is that yesterday or 2 days ago, Alameda Research, so FTX, basically exited 50,000 ST over a matter of hours, suffering massive slippage to exit. So they really just wanted to get out of this ST position. They switched all their ST for Ethereum immediately. Now, they are not the only ones who did this. A lot of big holders have already done this as well. So all the market makers, all the funds, all the VCs, they are basically out of ST and they switched their ST for Ethereum, which brings us to Celsius Network, because Celsius Network has a lot of ST on curve. Now, Celsius Network, for those of you who don't know, they are a company where you deposit crypto and you're able to earn yield on your crypto. You can deposit stable coins, Ethereum, Bitcoin, whatever. So they have a massive ST position here. In fact, if you go down here, you can see that they have 450,000 ST worth $1.6 billion. Now, they are under a lot of attacks, Celsius, right now. If you look at their token, it has gone down by 50% the last couple of days alone, and it's down 95% from its all-time high. Now, there's a lot of people who hate Celsius. They think it's a Ponzi scheme, and they hate the founder of Celsius, and Celsius is not perfect. They have done a lot of mistakes in the past. They have lost a lot of funds in hacks and so on, but nonetheless, they have 450,000 staked Ethereum right now. And if they wanted to exit these 450,000 staked Ethereum, they cannot do that because look, there's only 144,000 Ethereum left. So they can only exchange their 144 staked Ethereum to 144 Ethereum, which leaves them with a lot of staked Ethereum left. So what do they do instead? Well, they use their ST to borrow stable coins. Why do they borrow stable coins? Because you're seeing a run on Celsius right now. In fact, there's about 50,000 Ethereum per week being withdrawn from users on Celsius. So if they do not have the funds to pay all of the people who are, withdrawing from Celsius, well, what are they gonna do? Well, they take a loan against their ST, but as ST continues to go down, they may start to get liquidated on this position. Now, I am not the one to spread FUD here. I'm just, telling you to be cautious right here. I think that STETH is going to be fine because, again, it is backed by Ethereum. So it's only a matter of time until you're able to claim 1 Ethereum for each STETH. So I think it's going to be fine. I mean, it's going to deviate. It can continue to deviate, absolutely. But at the end of the day, I think that you will be able to claim this. And because you will be able to claim 1 Ethereum, there's always going to be people who are willing to get into Lido Ethereum at like 5-10% discount or so. So I think it's going to be fine. But for Celsius, who seems to be running out of liquid funds, they are in a, very hard position right now. They are one of the only big players still in this curve pool, or sorry, they are not in this curve pool. They're actually on Aave, where they have borrowed stablecoins against their STETH. But again, if they need funds, what are they gonna do? They've already borrowed against their STETH, and if this continues to go down, well, they will need to solve that situation in one way or another. So as they say here, you can only do one out of 2 things. You can either sell your STETH for Ethereum and then stablecoins in order to become more liquid, to pay all of these people who are withdrawing from Celsius, or you can use the STETH as collateral and take out loans to repay customers. Now, the first option is, of course, just like I said, there's not enough Ethereum in the curve pool to exchange these 450,000 STETH. There was only, at the time of when this was posted, there was 242 Ethereum. Right now it's even less than that. It's only 144,000 Ethereum. So that is not an option. And option number 2 is, again, borrowing against the STETH. And they already have 1 billion in debt. And they have 2.5 billion STETH being used as collateral. So there is, looking at the data right now, a real possibility that Celsius is going to be liquidated on this STETH position. Again, not spreading FUD, but that is something that could happen. So you should prepare for it if you're holding funds on Celsius. Now, what does this have to do with the overall crypto markets? Well, if Celsius gets liquidated here and they are not able to pay all of the people who have deposited funds into the Celsius protocol, that is going to have a big effect on the crypto markets overall. So let's hope that this situation is able to be resolved. Not meaning to spread FUD here, just if you're holding funds on Celsius, be careful with that and keep an eye on this, guys. Keep an eye on the Lido peg here. Keep an eye on the funds Celsius are using as collateral for their loans here. They need to have this in a healthy state. I am, of course, going to keep you updated, but if something happens with this, it is going to have a ripple effect on the rest of the crypto markets. So be prepared for everything. And finally, I want to talk about this. So the USD peg, the USD collapse, was in part due to Celsius network activities. So Celsius was one of the biggest holders of UST, and they were one of the first ones to actually start to sell massive amounts of UST, which, contributed to the death spiral of the Luna token and USD peg. Now, here's the thing. Of course, the protocol was flawed to begin with, but there's no denying that Celsius definitely poured, fuel on the fire. And they were one of the first ones to withdraw 420 million USD from Anchor and then sell that immediately to liquid stablecoins. So that definitely contributed to the depegging event and the death spiral. This is why some are speculating that the people who are trying to liquidate Celsius here, whatever is going on, all of the articles being spread about Celsius, all of the FUD, well, there may be some massive players who were liquidated here on USD and Luna, and they are not too keen on Celsius at this point, given how this all played out with UST and the contribution from Celsius to that event. So guys, that's what I got for you today. Thank you so much for watching this video, and I'll see you in the next one.